Okay, so quick update on this Bitcoin breakout that we've been following for the last couple days since October 7th. We got out of this symmetrical triangle right here, this black one, and then as you can see, we've also gotten out of this more royal blue colored one. We came down, tested it as support on the 10th, and then we've been maintaining this upswing since. So essentially, it's just the candle bodies to the candle wicks triangle. And now that we've broken out of both, we don't necessarily need to break out of these. It's just a very simple technical analysis starting point. So what we did in a couple videos ago was we were discussing the Bollinger Bands and the Bollinger Bands width tool and how when that breaks below 0.1 that we can expect a breakout, and the closer it gets to 0.05 it makes the breakout even more explosive. So essentially back here in late July, we had a similar thing going on where we were forming this symmetrical triangle and it got really tight around here, and then we just had this explosion upwards. And I think we're actually seeing something pretty similar happening today, although there's lots of things that could come up in the short term that can make this go against us, and we'll talk a little bit about that. So just do a quick cap of what's happening. We have the dollars flat right now. I wasn't expecting much of a move in the dollar. It needs to sort of maintain itself at this point because it's been plummeting since September 28th. It's been on a consistent downtrend. We'll see like how far down we've been. Yep. So we're about almost 1.6% down. We're basically back into the same range we were consolidating in since basically the entire month of August. So, in a couple videos back, I was discussing where I think the dollar is going to go, and I believe that this line right here, this October 9th, is very reminiscent of this May 26th, and I do see continued downside. Basically what was going on was we pumped around March 20th because everything sold off, so the dollar pumps when everything in the traditional markets sell off, and then we were seeing a rejection trying to retest. And what happened was we had that same rejection happen in September 25th, so really recently. Got rejected right here, got rejected right here, and then after this rejection we made this slight U pattern and then came down with this big red candle. So that's essentially not necessarily the exact same play here, but as you can see the time difference is pretty similar, and we'll see how this plays out. So precious metals today flat. Dow is up, almost back at its all-time high. Think we kind of saw this coming. With all the negative news that was going on that led to this in the first place, there was just as much negative news coming up back to where we are today. So, I really don't know what to tell anyone. News is news. Of course, it brings volatility, and we want volatility. So a lot of these people that have this negative mindset of where things are going, they don't understand that volatility is king. And as long as we're getting volatility, we're good. If the news brings us up or down, I mean, it doesn't really matter because the people that are moving these markets can make money in both directions, and you just need to understand how to navigate through all of that so you're not getting, you're not losing trades, or you're not buying at the tops. You can't be perfect and buy at these bottoms. I think back here when Bitcoin fell down pretty hard on September 3rd, everyone was thinking that we would go fill this CME gap, which was in this region right here, as low as I think 95.50. And the long story short of it was people don't understand that the premiums are higher on futures on CME. So these wicks here, these wicks all the way down to 9,800, that did the job. That literally did the job. It filled the gap, and people will still not let it go. Here we are today, and I'm sure there's still people discussing this gap. And the reason why I'm bringing up this gap is because we have a gap right now. What's going on here? I'll remove this stupid squiggle. But basically what's going on is on Friday we closed, and since Friday had that massive pump, the spot price is up. It's leaving this gap. And believe it or not, I think this wick right here could have filled the gap. Now, I don't mean completely, because we don't need to completely fill the gap. As you can see down here, this is the gap I was talking about earlier. So I just have this marked off for my own reasons, but I don't wait for this gap to be filled anymore. I have marked how much of it has been partially filled, but I could care less. I know where Bitcoin's going, and I just use this stuff to do my own analysis, and I'm sharing it with you guys so that you can understand a more level-headed outlook on where things are going. Now if gaps form, I've started to sort of track them, because I want to track them to understand how I could get in and out of trades. And I use them as a tool for my stop losses, basically, just so I can make sure that I exit trades profitably or at break even. But that's besides the point. The point of this video is just to discuss that these gaps do not need to be filled. It's just kind of like this thing that has taken over the space, the headspace of a lot of traders, and they bring that into their YouTube videos, and I believe it's just not the sentiment we need in a bull market. We know we're in a bull market basically because of what Ethereum's been doing. Anyone who understands Wyckoff accumulation understands that what's been, I'll go on the daily, they understand that this phase right here was called an SOS phase, and now we're in a backup phase. Now the backup phase can go as low as a regression channel, which would cut through this region right here. I will put on the tool so you guys can see this white line. Now, how much room do we have to the white line? Quite a bit. We could come down as low as 325. It is what it is. But during this backup phase, which is after the SOS phase, we can come down to this regression channel one more time. This area between now and when it goes back and touches this regression channel, it might eventually, because of how parabolic Ethereum's been acting lately, that is called crossing the creek, and I will make videos on that. There is really amazing technical analysis YouTubers who have also discussed this same concept. And basically that would be some sideways consolidation until the backup phase is over, which would be heading onto a parabolic bull run, sort of like what happened over here. And we could calculate these phases, because essentially right here we have, I guess, a spring, and then we come up. We have this huge consolidation range, and we form this SOS, and then basically from there things get pretty parabolic. We do have cooldown periods, and that's okay, because we have Fibonacci channels that show us how these would work. So coming down to support on 579 happened twice. It couldn't it basically came down as low as where it was here when the price was around 450, and did the same thing moving up here, excuse me, and then a blast off. It's just how things work. But to get back on track, we're in a really healthy uptrend right now. RSI on the daily for Bitcoin, let me go to my Bitcoin chart and remove all this mess. So the RSI right now is getting close to, I wouldn't really call it overbought necessarily, because it's just the daily chart, but things are looking good. I'm not too worried. This was just a typical correction for Bitcoin, and the way that I could tell that is because of something called the 21-week moving average. So this yellow line, this yellowish orange line, is basically what we come down to test during bull markets, and we could look at this over here. Make my scale a little bit larger. Excuse me. Should put it in log. Yep. I love looking at this. It's the craziest. But anyways, yeah. So here you can see between 2015 and the blow off top in 2017, as long as we were staying above this orange line, which started around October 2015, we were perpetually moving up. And then eventually after, we would break the higher levels of the peaks, we would come back to test it if we removed too far away from it. So breaking the new level, then we have to come down and test it, breaking the new level, come down and test it, breaking the new level, test it. It's just, it happens with a wick. So that means that could just happen in a single day, and it looks like blood in the streets on those days, but then next thing you know, next week, we're moving back up. So how has this worked out lately? Disregard this area right here. This is irrelevant. This was the entire market melting down, and I don't even care about this part right here. If you bought during this time, good for you. That's about all I could say. So what's been going on since we've corrected? I believe the bull market actually started in January 2020. Like, in a macro sense, it started around then. And the only reason this all happened was because of the Corona crash. We would have eventually came back to test this regardless, but we would have been to about where we were with less time. But it's okay because this presented an amazing buying opportunity, and for anyone who bought altcoins around here especially are doing really well. So we've come up since May and haven't touched down on this orange line. Now, what does that mean? We were riding this 13-week EMA, but we need to come down and eventually test this 21-week moving average. And that's exactly what we did after we came up here. We came down and touched it the day that everyone was talking about filling the CME gap. It won't leave us alone. And then we did touch it again on the 21st. And that is amazing how it touched it perfectly. And it's with a wick, because if you look at how much it's came up before the weekly close, it's a significant amount from the bottom of the candle body to the wick. 6%, or sorry, 6% on the downside, but let me just draw that really quickly. Yeah, sorry, so 6.5%, massive. I mean, it like, that would have been the perfect opportunity to buy. Basically on a weekly chart, to come down to test the 21-week moving average from here on out might be the greatest buying opportunities that will present themselves. So if we're gonna have any take away from this video, it is that the 21-week moving average is crucial. On the daily, I think the 55-day moving average is a better indicator, which we've been above. The 55 in this case is the white line. So as you can see, we've pumped above it right here on April. We stayed far above it, and then we consolidated. And then when we peaked over it after the consolidation was when Bitcoin tried to test 12K. Now we've broken through it, and now we're getting right back above it. So it's basically reminiscent of a restart of this area right here, which if we were to do a measured move, or I would just say a percentage move is fine enough. Let's just say from there to, we're looking at a 30% increase. So if we had to say from the day of the breakout, if it happens to be this day plus 30%, I mean, yeah, we're going to be retesting the 14K level. Let's just say 13.7, which is this area that I actually drew up here, and you see this dotted line. 13.7 is going to be a really hard resistance to break from a daily perspective. Let me remove all of this stuff just so we could see really quickly these levels. So yeah, 13.7, we get out a log. Let me remove some of these moving averages to make it easier to see. That 13.7 level is where we had that wick back in July 2019. Obviously, breaking 12,500 is our first goal. 12,500 first goal, because that's a higher high for the new year. And it would be great to break through that very soon. And with the fact that it's only a couple percentage up, maybe 3%, 4% up from here, we could do that by next week. It's very easy. Now, I'm going to do a quick rundown of everything else. Let's check in with the Dow again. So the Dow is basically at the top of its range, testing new all-time highs. The S&P 500, same thing. NASDAQ, same thing. Obviously, you could basically pick one of these if you want. Doesn't matter. They're all going to look the same. 10-year yield, it's still finding support, same levels. I assume that it could come down as low as 0.75, which would just be finding support and a bounce, but I believe that's what this candle did right here on October 9th, Friday's recent Friday's close. Oil getting hit today, down 2.75%, so I believe oil has some more upside to go, but yeah, I mean, it makes sense why the dollar's flat on a day where the Dow is up 250 points, right? So these are some indicators we could think about. If the Dow is up 250 points, the NASDAQ is up 3.2%, but the dollar is flat, yep, look at crude oil because that's going to tell you what's going on. Or you could look at the 10-year yield, either or, bonds or the bond market or the crude oil. And then Apple is just smashing it today. All the tech stocks are doing well, but I like Apple. I do technical analysis on Apple. Moving into earnings, better watch out because if we're testing this new high before then, yeah, might be good to take some profits. But anyways, back onto Bitcoin. We're touching that. We're getting close to that $11,600 area on the USD pair. Okay, another thing, the XRP chart. XRP is moving very sluggishly. It's just like these doji candles, sorta, every day. Yeah, I'm doing some paper trading on, so just disregard the lines. I do leverage trading and paper trading just for fun and also creating some content for people I know. But yeah, so I really want to see a big breakout in XRP soon. We should be getting one of these massive green candles. There's no reason why Bitcoin is back into its range and XRP isn't, unless XRP, as my favorite indicator, is about to do something. So obviously the resistance it has to break is this 259, and we're like literally so close, 0.5% away. Once we break that, I think we will. So on a daily candle, if we could close today at 26 cents. It's going to be a massive green candle coming again, basically just like this. So there's the candle that we're looking to break technically, which I'll just call it 26 cents. Ethereum back in its trading range. It will obviously have to break these levels from here. So that would be $395, super close, just a couple dollars away. Chainlink's looking great. Chainlink is a 21-day moving average indicator. So look at this orange line. Every time we're above the orange line, we're doing pretty good. When we break below the orange line, we have to fight it. And that could basically be seen here on this entire run as well. We're parabolic the entire time. I think, believe it or not, this March crash that happened, it's like one of the greatest buying opportunities in the stock market and in cryptos that we'll ever see again. Seriously, there's so many people that think the market's going to crash again because of the elections and that we'll see these prices again. Like, are you serious? I don't know. I'll let everyone else decide on that. I don't really care. I know what I'm doing. I'm not going to get into alts too much, but I do want to leave off with talking about some events that we're moving up to, which might impact the dollar or the traditional markets. Either or will make a directional move for Bitcoin. So let's get the CME gap at 11,100 out of our heads. We're not going to talk about the gap much on this channel. I don't care about it. The only thing about gap that makes me smile is Kanye West making clothes for the gap. But that's another story. So what can we see playing out here? If the stock market continues to pump the way that it's pumping, if it does want to surpass its previous all-time high, we know what's going to happen with Bitcoin. Bitcoin will be back at 12K within the same day. I mean, we haven't even had a massive candle like July 27th yet since this breakout. We're basically repeating the same week before that explosion. So yeah, we can be above 12.5 fast. So because we just closed a 4-hour above 10,450, which was what I was looking for. Now we should close a 12-hour above 12,500. Very bullish. We will be closing today, hopefully above 10,450. That's my target. So if the market can just close out today in the green the way that it's doing, which it seems it will, unless there's stimulus news that comes out. Stimulus news is a massive indicator, and we do need to take that seriously if we're trading these markets. Unfortunately, it seems like our government doesn't really, how do I say this? They don't really seem to be wanting to give out money to people or small businesses. I'll leave it at that. And I think that's why a lot of sentiment about a new market crash is building up, because people believe that we are crashing again. It is what it is. I think that if they float out stimulus news, or if the Dow wants to break, or the S&P wants to break its previous all-time high, even closing the candle above the day that it started its downtrend, that is massively bullish, and we'll see a dollar below 93. The dollar will start coming down towards 92.5, and hopefully oil picks back up, and all the cryptos will... Yeah, there'll be a change of a guard, of course, at first, because Bitcoin will regain its dominance on a day like this massive green candle. Your alts are going to look like they're taking a hit, but it's just they'll eventually catch up. We know that. The same thing happened around here. And then in early August, Chainlink was hitting $20. I mean, that was just blowing people's minds, and every single day, all the people in the crypto community just couldn't stop talking about Chainlink. So I think we'll be seeing Chainlink revisit the $20 highs soon if all those other things want to play out their way. For me, the only thing I care about right now is seeing XRP back to 30 cents. Why? XRP is my main indicator. It is the New World Order stablecoin. It is very critical that we take that project seriously. There's massive developments going on in the background. Like it or love it, I don't care. You could hate Ripple all you want, but at the end of the day, it is an indicator. At least it's an indicator for all the altcoins, along with how they're pumping Tether, because we know who's running Tether. Well, that'll be all for today. I want to see a close above 11,450. If we do, massively bullish, as long as the news and the markets stay happy. And if we do close today above 10.6, I do think we could be back at 12K before the end of the week. So we'll see how this plays out, and we'll keep following this breakout as it goes. All right, talk to you soon.